What is up guys, Ethan on Crypto here again with another video, and today we're going to be talking about the latest news of crypto and why it looks good in 2024. And in this video we're going to be talking about specifically Bitcoin ETFs with the company of BlackRock and Fidelity. That these ETFs are performing relatively well. They place 8th and 10th place out of all ETFs, and keep in mind there are around 3,100 ETFs in the United States alone. They had amassed over $4.8 billion in net flow in January alone, and this is a promising future of Bitcoin, and a long-term investor, it is great news for you. And BlackRock, an estimated of $2.6 billion in net flow. Fidelity had placed 10th place with $2.2 billion in net flow. This is huge news for the future of ETFs, and this is actually a positive outlook. Okay, this is what we expected, this is what we wanted as investors. I've been investing into Bitcoin since 2017, purchased my first Bitcoin at $500, purchased Ethereum at a very good price, and this is just such good news, and it's nice to see that Bitcoin continues to rise over the years. The next topic that I want to discuss with you is the Bitcoin ETFs lead to record miner reserve Bitcoin outflows. The launch of ETFs in the United States has directly influenced miners' Bitcoin's reserves, with more than 1 billion of Bitcoin flowing from miner wallets to exchanges in the first 48 hours of trading. Okay, that is huge news, showing that there's a liquidity coming into the market, volume coming into the market, miners finally selling their Bitcoin. February 1st, just last week alone, we had also just witnessed another significant amount of Bitcoin moving out of mining wallets, miners' wallets. With 13,500 Bitcoins being sent to exchanges, report also noted that around 10,000 Bitcoin was sent back to miner wallets on just the next day, February 2nd. Suggesting that the activity could also be attributed to specific mining companies rebalancing wallets. Now, Bitcoin miner reserve has decreased to 1.826 million Bitcoin, its lowest point since June 2021. Analysis add that some miners may have also looked to capitalize on the price surge weeks before the ETFs were approved, as what they're saying is they might have had a clue or insight that these ETFs were bound to happen in the near future. Many analysis maintain that a significant majority of the Bitcoin supply continues to be tightly held, suggesting and telling us that the trend of holding among long-term investors reflects a continued belief in the future of appreciation of Bitcoin. Now, with these news coming out, it looks promising for the future of Bitcoin. The ETFs are doing really well. What we wouldn't want to see is them placing 100, 200 place, but it is showing that they're amassing large amounts of money in its ETFs, and people are actually believing in the future of ETFs, and not just you and I, casual investors that don't really understand crypto as a whole. Now, this is great news for the future. Let the market settle. I know the market is currently consolidating, but let's just be patient, and this is a good insight that this is a good future to hold. I wish you guys the best. We're going to be jumping right into technical analysis and see what I think is going to happen in the near future of Bitcoin. We're going to be diving into exactly the highest probability. Alrighty, so here we are in the charts of Bitcoin USD, and we are under the exchange of Binance. If you guys can't see, let me move that for you. It shows Binance on the top left. Now, the reason why I'm using Binance is because it's widely known, and I think honestly it's probably the most used exchange out there. Back then when I was trading in 2017, there was an exchange called Poloniex, and that one went in the gutter. That one is no longer there anymore. I don't know what happened to that exchange, but Poloniex was the one on top back then. Now it's Binance. Okay, so that's good. So first thing first is we're in the monthly time frame, and I would want to tell you guys that we're going to be doing a top-down analysis, and if you don't know what that means, it pretty much means we're looking at the charts from a larger perspective, and as time progresses, we're slowly dimming it down into a smaller perspective. So right now, every candle represents a monthly candle, and sooner or later, each candle is going to represent 4 hours or 1 hour or a daily candle, right? So if you don't get what I'm trying to say, leave in the comments below so I can elaborate a little bit more with you. But first thing first is we are in the monthly time frame, and we obviously see that it has been going up since January 1st, 2023, with a return of roughly 200% gain in only 2-year time. That is a huge return. Anybody who bought here, you're winning big, and congrats to you. But the question is, what now? Now, I'm a day trader in Forex, so I'm going to implement a lot of my strategies that I use over there as far as price action and how I analyze the charts and bring it over here in the crypto market. And there's something that's really important for me is finding out supply and demand zones that, it's very difficult to find. Now, a candle that does not belong there, and you might be asking, you're throwing me off now. Keep in mind that there is a green and red candle, and if it's not green, my apologies, I am colorblind. But I'm going to be looking at this area in instance. We have a green, green, red, green, and what that suggests us, and what that is telling us is that red candle there shows that there was a lot of sellers because we had a huge momentum to the upside, and then boom, we had sellers come into the market. So what I tend to do is get a rectangle and draw a rectangle across there and drag it from there. And here we have a monthly resistance zone. Okay, here we have a monthly resistance zone, and this is going to dictate the future of the market, the future of the direction of Bitcoin. So if we end up breaking this area of resistance, we should have a huge sky rise to, who knows what. Okay, I can't project the price of the future as far as like 70,000, 40,000, 30,000. We could use is the next time, the last time a resistance was hit, right? So let's just say hypothetically the market tends to break this monthly resistance line. Let's go into the lower time frame and see in the 1 week time frame. Every candle represents 1 week. And what I mean by that is when we're looking at this market now, we can see that price was rejected here, price was rejected here, price was respected here. Now, wicks are widely important in my strategy in trading, and I day trade. So this shows us right here, if I zoom in for you guys, we had a huge sell-off here, but look at this. Buyers entered the market, right? And that was when buyers were in control. Buyers pushed the market up again. But when prices below it, sellers are in control. So when prices go back up and hit that area, it's vice versa. It's not buyers are in control pushing the price up. It's now when sellers enter the market here, it will crash at this point. So what I'm going to do is draw a horizontal line just like this and know that if price does break this monthly resistance line, we could pretty much see an increase to $50,430. Okay, so this looks very promising that the price will eventually hit this zone, but the question is, will the market need to retrace first, right? We can see here that price has broken above it, had a retest and continued to the upside, broke below it, had a retest, continued to the downside, broke it, down. What this is telling us is there's a probability that the market will eventually hit the zone before the huge power move. But as of right now, in the monthly time frame, we are hitting resistance line, so there's not really much to go off of besides of just being patient. Now, what I think is going to happen is the high probability is that there needs to be momentum for the market to continue going up. Right? Markets go sideways. Markets go up and down, up and down. They don't just go in a straight line, and that's it. So what I mean by that is we could see a retracement probably back down to the 38.2 level where it wicked out in this candle alone. Price could consolidate down here, and then we could see another impulse to the 56,000 level or maybe $53,000 level. Now, in my trading is always playing the higher probability because at the end of the day, we're just guessing on what the direction is going to happen. So we play the role of, hey, this is the highest probability. We're in our safest bet, 8 out of 10 trades, right? So always chase the highest probability trades because you never know at the end of the day what is going to happen. The highest probability is it's going to continue going up because it's been going up for 2 years, and you don't want to be that guy and be like, no, now I'm going to guess it's going to go down now. No, throw your ego away, ride the wave, and this is why you may not be profitable and why you're not making money as an investor. Enter the market when it's going up and be patient with it, okay? If you had purchase here, purchase here, purchase here, even when you took a hit here, purchase here. If you had just purchased in the last 2 years at any time of day, in the last 2 years, it doesn't matter. You would be winning right now. And that's a fact, okay? So don't try to change it. Okay, if you're winning, if you would be winning right now, then that's huge. Now, I'm looking at the market right now, and something actually just caught my eye. And what I'm going to do is erase this. Okay, we see this huge wick where sellers enter the market, and this is actually really important in my strategy. And we can see that we respected that area, and that is telling us that this area was a lot of sellers enter the market. A lot of sellers had orders there placed until the market hit there, and they dropped the market. They cashed out. But look at this. Buyers push the market to make sure that we stay above it. So this is telling us that, look, we're trading with the trend. There's a high probability it's going to go up. And we're respecting a huge resistance line. This is looking amazing. We have fundamentals of ETFs looking great. We have technical analysis showing that there's buyer momentum still going on in the beginning of 2024. Is this saying that, is this another year of going up? Are we going to see another 12 months of going up? Honestly, I would think so. Okay. Now, if you guys want to look for short-term entries, what I'll be looking for, this is not financial advice, but this is just what I would be looking for. We have resistance here in the market, rejected, crash, rejected, crash, rejected, respected, broke it, retested, drop. Right? So at the end of the day, what we want to see with the highest probability setup is obviously we want the price to break 44,250 for the continuation to the upside, maybe to the next level of $50,400. So you want to make sure that the resistance gets broken and the buyers then enter the market. You don't want to just enter the market because, just because. You want to wait till there's signs of a higher probability. Like I said, guys, play with highest probabilities because you will eventually be profitable and make more money. Don't just enter because you want to. Find the higher probability setups. Figure out, does it make sense? Does the risk reward make sense? Does fundamental analysis make sense? All this must, correlate with each other in order to bring in the greatest returns, right? So I hope you guys enjoy this video. As of right now, I will be looking for a breakup structure retest of $44,400 for the continuation of $50,400. So hope you guys have a good one. Take care. And consider liking or subscribing and follow my Instagram at E10 where I post my trades.